Our favorite.
Yeah, he did. He took a little hit.
Is it bad? Stitches?
Uh,
What?
no, stitches. I mean, it's just he looks like a unicorn right now.
Oh, okay.
It looks pretty bad.
Boys.
Yeah, but that's okay. Let's get going. All right, guys. Today I plan on covering market profile and kind of help the newbies that are new to market profile, and we'll touch base a little bit on volume profile as well. I don't think one goes without the other, but I think first we need to start talking about the market auction theory because a lot of people that I'm seeing, and I'm not sure it's true for all of our people in the room, but they have the idea that there's more sellers, more buyers. That's really not true, right? And then you have people that have, 500,000 followers talking about volume profile and some gaps and shelves without really understanding what that means and what does it mean in terms of market auction theory. What does it mean in terms of value, right? It's one thing to have, volume profile and which is volume at price, and then the other one is the time at price. And I would say both of those together, right, make up what true value is, right? Price plus time, price plus volume gives you that confirmation. But none of that would be, I would say, a true definition of value if one of the components is not being used to help you formulate that opinion where the value is. So what we're going to do today is kind of cover the market profile, touch base on volume profile because volume is used to confirm the auction, right? Whether it's healthy or not. Time, time is just the essence of opportunity, right? So if you have the opportunity to go along and everything is giving you market generated information at the lows to do this, or if you're in a bracketed market buying at the bottom, selling at the top, that opportunity comes in, and depending on where we are in terms of the day, the RTH session, we can figure out, right, is what's the probability of that working out or not. And we use that a lot, right? Along with the date types and everything, you're able to make some assumptions whether the trade's going to be in your favor or not, right? So let's kind of get going, right? So the market, if you think about auction, it's like any other auction that you've been to or heard of. You need two participants, you need somebody to sell, and you need somebody to buy something, right? So what's most likely going to happen is that if I'm willing to sell my car at $20,000 and you're offering me $10,000, that trade's not going to happen, right? I'm probably not going to let it go for such a big difference between somebody's mic just went off. Okay, thank you. It's not going to be met, meaning you need the highest bid and the lowest offer to meet in order to facilitate the trade. And market is just basically there to help us facilitate the trades between participants, right? So do you guys want me in presentation mode or are you guys okay with this? Can you guys see it well?
Can you do presentation mode?
Yeah, sure.
No me dejan hacer así. No, por eso. Yo te presto.
Makes sense?
Juan
Guys, you have to go
Velasco,
on
you
mute.
got a
No
hot
creo que
mic.
te cobren algo.
Juan Velasco, hot mic.
All right, hold on, guys. I'm just gonna start muting you guys forever. Drew's on, but he can mute him as well.
He muted himself.
Okay. So a market auction, I mean, don't confuse this with like your RSIs and people build strategies of the VWAPs or whatever, but this is not really a strategy. This just tells us, at what level do we have buyers and sellers, and then what is their interest, right? If I'm looking to get rid of that car that I had, let's say I know it has a faulty engine, and this guy's offering me 15 instead of 20. If I accept that right offer, that makes me a little bit of an aggressive seller because I just let go of 5,000 K of opportunity in terms of potential profit. So market is just a behavior of facilitating the trade, right, between the participation, right? Sometimes you have the short term, sometimes you have other time frame, long term traders coming in. And the goal is to provide liquidity and match the highest bids with the lowest offers, right? If this didn't exist, then you go back, way back, and if you've ever been on the floor, the way they determine, in the pits, which one's getting action in that pit. What do you guys think? Is it the voice? Is it the body language? What do you guys think they used before? I mean, a lot of us are just computer traders. You don't have a seat, right, on the floor. What do you guys think they used?
Didn't they wave tickets up in there?
They did, but just because they waved the ticket doesn't mean you don't know that, right? One was
The
their
noise.
tone, their nose, their expressions, right? When you come to a pit and you see nobody's talking, nobody's, when there's panic, people kind of express their feelings a little bit more. They start speaking louder. They, their body language gets excited. You can tell a lot of that when you see a person, right? If you see somebody smiling and he's like, yeah, 100, 100, 100, at the ask, well, you can determine, what's happening in that pit, right? And a lot of times that was used by floor traders to determine that. Unfortunately, you guys don't get to feel that, neither do I. Initially I used the orbs to kind of help determine the 15 or 30-minute orbs to figure that sentiment of the morning and see which way they're going, right? And in market profile, how that correlates to this is, when you open the first 30 minutes, then you have the, the 1 hour balance, helps us determine those things. And we have kind of behind the screen sentiment. Hey, we are open in 30 minutes, you're staying within the range, or within 1 hour, we have an IB that's inside a previous day value. That gives us that sentiment that we don't have because we're, screen traders, right? You're not on a CME, you're not in New York on the floor. So therefore you don't see that, right? But before, they would use that. The floor traders definitely use that to determine that. And it's simple auction. Somebody's screaming, somebody's offering, but their body language kind of helps determine that. And market, is always going to be shifting between balance and imbalance. If you guys remember the volume profile classes that we did, we had a couple of boxes that explain acceptance, rejections, right? So the market can stay in balance. You can call it range high, like where you have the ceiling and then you have the floor. And we trade within, right? That's called two-sided activity or a bracket. As long as in there, that's pretty good for dealers. Dealers make money. They facilitate the trades. They sell to you high, and then they reverse it. They buy low and they sell a little bit higher. So they take marginal transactional profits, right? But then as people, as traders, right? Even now, currently, in the market that we're in now, we're in a 4-day balance, and a lot of people probably swung calls over the weekend. I would say, is that the best probability to have? Maybe, right? If we gap up and we hold that high and seek acceptance, then we might cause an imbalance to the next value that was built before. So first, you have to determine, what is the balance now? What is the value currently? And then the next step is for us to figure out if we are to break out of this balance, go into imbalance. And imbalances are formed how? Why? Why are the imbalances formed?
Seeking other value.
But what causes us to go imbalance?
There's new information.
Yeah, there's new information that enters the market, right? If I tell you right now that the virus in China just killed 2.6 million people over the weekend, what do you think that happens to the market tonight? It's just, hypothetical. It would be bad, right? So that information, the news market is forward looking. So it reads, it has all the current information in it and prices correctly. It's efficiently priced. That's what the market, I believe theory is. So if it's priced efficiently and news come in and we break out of that and go to an imbalance, that means, let's say you go imbalance higher, you mark up. If you mark up, that means somebody believes that previous value is cheap, and in the future they accept the value to be where? Higher or lower?
Higher.
Yeah, higher. And when you think about short-term traders, as me and others here, and am I a long-term trader? Yeah, but I'm a long-term investor, but I'm a day-to-day trader, right? There's a big difference. Would I take all my kids' money and buy SPY here at 600s? Probably not, right? As a long-term investor, there's not enough value for me right now, considering their age, my age, and I'm like, I can wait and be patient and buy individual stocks for now before I start buying, let's say, some ETFs or other vehicles that I can invest for them. So don't mix yourself as a trader and an investor, right? There's opportunity in the market when you're all-time highs, because not everything's at all-time highs, right? There you can find decent value stocks, but that are below value. And as a buyer, you want to be buying below value. So if you're in a bracketed market, balanced market, it does not make sense for a lot of people to buying longs in a two-way activity bracket at the top. And same thing as it doesn't make sense to sell at the bottom of a 4-day or 3-day balance. A couple of days ago, we had a watch list. Didn't we say if you can hold that 34 level, then most likely you're going to hit that 72, 68 zone? And I said, just go long and close your laptop. Is that what I said? Pretty sure I did. I said, if you go long, just don't step away, just close it and, go. And like few of you guys caught like 30, 40 points on individual contracts. And that's big money, right? If you can do that, every 7 days, you're okay. You will be pretty good financially. But a lot of people, don't understand the market structure and the behavior, and then they usually create a wrong position at the wrong location. You don't short the bottoms of the balances, you don't go long at the top, and that's what the third bullet's kind of explaining. Understanding the price behavior, right? Price is just a mechanism of discovery, right? And there's only two things the price can do. And if a lot of you guys start thinking and shifting towards this mindset, it becomes easier for you guys to become profitable and to kind of handle your emotions as well. And you should ask yourself, is price being accepted or rejected here? And just like we talked about before, if I'm offering a product, if I'm selling an iPhone 16 and I start the auction at 100, I'm probably going to have a lot of volume and a lot of bids, right? But as the price goes, let's say higher, let's say it gets to 1600, well, maybe there's different people with different value of that iPhone and they might bid higher, right? An auction can continue as long as it can accept the prices and build value in that direction, right? So that's the last bullet. If people believe that iPhone 16 is phenomenal and there's no any issues with it, it produces everything it needs to from the technology standpoint, maybe there's crazies out there that'll pay 5K, and you might be lucky to sell it to them, and you would be smart as a seller to sell it to them, because most likely if you bought it from manufacturer, you paid like what, 1,000, 1,200, 1,400. So don't always, a lot of people are like, man, this is pretty high, can't go higher. Well, market can go a lot higher and market can go a lot lower, right? And a lot of people make absolute statements in the market and they learn the hard way of price discovery and price acceptance and rejections, right? I was one of them, about 9 months ago when the video was trading about 280 before splits. I was like, man, this is a pretty good short level. I took the short in the video, and then I got, I took a big loss, about $22,000 on my shares on a short of NVIDIA. But that's okay. It was a big level that it was the setup that I played. But not to say that the NVIDIA can't go even higher, and it did. It went to like $1,000 from like 100 and something. So it was a pretty good return for the longs. I was just looking to short it and then look for longs at 150, but it didn't work out, right? So does this slide make sense to all about market auction? The key for you guys to understand is the balance to imbalance, and then we'll go into more details. Does that make sense?
Yeah.
Yeah. I covered this indirectly, right? So the trade really does not happen at all It's just that we have a lot of participation and it's very quick. Then you have the HFTs, right, that are participating as well. And the number of trades that go through the market is like insane. And a lot of people just think of themselves as like, oh, I can influence the market. I'm going to go along here and I'm going to dip by 5 more contracts and it's going to bounce. And then people start creating this crazy logic that 5 contracts really matter in the market. It really doesn't, right? And that's where a lot of people hurt. You know, you have a plan, you stick to it. If it doesn't work out, take your loss. But you have to know that pivot of what is it that you're looking for. So market behavior, right? So on the bottom left, when you guys think about this right here, this is the balanced market. We're trading inside, right? This is a two-sided activity. We're preparing for a move. So let's say some good news come out and we go auction higher, which is typical. We proceed, make higher highs. Then you're coming back, right? If you're able to hold this prior range level, which is, let's say in this case, value area high or value area low and on the bottom side, that means, you know, you're accepting prices higher. You visit this value area and you found, yeah, no, we got buyers and they're going to defend and they're going to proceed to auction higher. And we've had this happen. I don't even know how many times, you know, I mean, it happens a lot. Just now we had it happen when we broke the, if you guys remember, 59.18 to 59.14 zone on ES continuous. It was the, I believe, October, November value area low and high. We went below that. They struggled. Then they were able to kind of auction higher than that. Now we're above it, right? And then they created some single prints, which we'll cover shortly in that range as well, like 21 to 34. It was a nice split of value. And then they came back on Friday and they defended that 34. You guys remember? And then they proceeded to go higher. So as of right now, they're telling you we're seeking prices higher. We believe the value of this is not here. We believe it's more, and that would be a good acceptance level here. If they are to reject that, right, that would mean that they go below here, and then you have something, you know, the 80% rule. There's a 80% chance that if you reject this range high, you're going to traverse all the way to the range low, right, with some targets in between. I would say that would be typically the play that we take on while trading live or preparing for swings if you're swinging anything. Okay, does that make sense to everyone?
Yeah.
Okay. And when you think about value, what helps you determine value? How do you know what's value?
Volume.
And time.
Okay, but tell me more.
Price
Like, how do
cycle
I?
higher or lower?
Yeah.
Trading in a range.
Okay. What about like the bell curve? Wouldn't we use the 68%? Some people, you know, rely on 70%. Wherever we have volume or market profile based on time, if we're spending 68% of volume in this area, that means we're not interested trading, you know, second, third sig or second, third standard deviation on the top or the bottom, right? That means we're happy trading in here. We determine it based on majority of the market staying within that mean, the first standard deviation. That's considered value. When you step out of there, that means you're seeking to find new value, right? Somebody go on mute, please. You're seeking to find new value. Okay. Think of this, and you know, if we have the bell curve in this training as well. As long as you're within 68%, that's a balanced market. You can short the, you know, the tops, buy the bottoms, reclaims with a little bit more confirmation, and that's pretty good. But then acceptance is, you know, respecting that level where you broke out from, where you disagreed on the price and value of it before. That would be acceptance. This would be a rejection. Does that make sense? Because this is pretty instrumental for you guys to understand. From here, you build on your trading plans. Okay, so I added this here. So this is your balance. And then let's say you create an imbalance to the upside, in this case right here. You have to know where the current value is. And how do we determine value from Friday to Monday? What is the key component to that? If I'm looking to trade Monday, why what is it? Do I look at the Monday's value, or how do I understand if we are within value or outside of value?
Look at the prior week.
Well, we look at the prior session. If you're, longer time trader, sure, you can use prior week, but then, on Monday, you have to look at the whole week. You can't just look at the Monday. If you're a day trader, and most of us look at the day sessions, right? Day to day. So on Friday, let's say we had a value close there, and we'll go on live charts. If we open within the value, high chance that we are just accepting that value and we are not seeking. But if, let's say, within 30 minutes of the auction, we start exploring prices higher, that would mean that we are most likely creating an imbalance and we are rejecting that value that was created. And then this is pretty similar to what I created here, just a little bit more visually, in the thought process behind it. Where's the current value? Well, if we are in a 4-day bracket like we are currently, let me just kind of exit out of this. So if we look at this right now, and I just, let me change this to, come on, trading view. Gotta delete everything. So if you guys look right here, what is this happening the last 4 days?
It's overlapping value area.
Yeah, they're just overlapping. This is called the balance, right? So if I go right here, I can say that this is a 4-day balance that we are in. Is that fair? So this is our 4-day balance, and I would say that's our value currently, right? I'm just going to increase this a little bit, maybe it's 7 for a moment. So if this is our balance currently, right? Where's the next value that we could go to if we are to get out of this balance?
The one directly above it.
There's one directly above it, right? So what he's referring to is probably somewhere around here. There's a value that was being created and there's overlap there, right? Is that what you're referring to?
Yeah.
So you had about, 2-day balance, then we had like a little, I would say pop, some weird day here, I guess the half day. And then you had the Thursday, we came back down, trapped some longs, and we came back within a balance, right? And then you opened outside of that prior 3-day balance to a downside. And you can see, now you're kind of going back and forth, but you see where we went once we kind of went below this value that was built. Where did we go? We went to the previously found value, went to the bottom of it, right? And we bounced. So not only do you have to determine, what is the current value, but where can you go if you get in, if you break that current value? And that's the, as traders, I would say that's fairly important for you guys to understand. Where's the current value? What is it? And then what's the next closest value to the currently being built? So if I look here, this is the current value that's being built, right? Well, if they, they're inside of this value here, well, if they hold it, there's probably a high chance that they can go back all the way down to about 620. And then they will have probably maybe a 3-day value area high somewhere inside of this. I will just not extend this for a moment. So we know that they can, at least go to about the 615 level. Do you guys remember this level being important at all recently? Nobody?
I've got a box on my chart from 09 to 15, but I don't remember why.
December POC.
It's December, and it's a little bit more than that. It's almost like a 2-month POC. I just grabbed it from November 5th. This is a pretty big node here, right? And what would that node tell us? I mean, I'm grabbing volume profile, but I would say if I was to grab TPO, which is time-based, would time be equivalent to this? Maybe, maybe not. But what I do know about this is that we spent a lot of volume at this price, right? We went one time above, we peaked above that, I would say 2-month, SIG right here, and then we went below, we went below this sig, and we probably, if I was to guess, bounced somewhere at the second standard deviation perfectly, and now we're back inside. So what is the odds tomorrow that we go to the 615, we gap over the close, we open here, and that we hit 615, peak above and fail? What would that tell you?
They're
Price is
rejecting value
rejected
above.
higher.
Okay, that is correct. If you're rejecting at the most, if you go above the fair price and you're quickly rejected, that tells you a lot, right? So POC and TPO or volume profile is the fairest price that the price has been at. For the past 2 months, this is considered the fairest price. So if we are able to, let's say, auction above it, and let's say we hold this level, should you be bearish?
No.
You're going to be paying the price, right? Because most likely you're going to be wrong. If you're able to hold this, there's what will be the next target that you're looking for.
Value area high.
Yeah, it would be the value area high, right? So that would be, let me make sure this is extended. It would be the value area high, which is somewhere around 60 level, and you have a little bit of, I would say, what? LVN, right where the prior 3-day high was, I would say somewhere around here, you would have, a little bit of volume LVN. And when you see an LVN, what does that mean in terms of price?
Easy to slice through.
Or
Nobody wants to trade that area.
nobody was interested to trade that area. So could you not get a rejection in that area too?
Yes.
So if I tell you that this is an LVN right here, right, and I just look at the candles right here, we sliced through it last time, right? We came back, tapped it, right? Close. I mean, if I extend it, it would be perfect. So there is potentially some aggressive sellers, and nobody's interested in buying it from last time in that area. So a lot of people confuse when you see an LVN. So when you guys think about market profile, when we have single prints, isn't that one of the setups that I like to take long when you retest the single prints in an uptrend? Don't we take that long or short depending on what the direction was? You guys understand what I'm asking you visually? Are you guys following the question?
Yes.
No, can you repeat it?
Yeah. So if you have a trend where we auction from, okay, thanks, bud. I'll look it real quick. So if you look at, let's see, let me find one. Okay, there's one here. So this will most likely be, I would say, a single print here if I go into one. So if you see this zone right here, if tomorrow, let's say this, we don't know the right side of it. We auction here, right? We go up here and you come back the next day to the single print zone. You guys were shorted because of an LVN here. You guys were short here. We were in a trend. We were breaking out of balance. The next day you're coming back to these single print zones. Would you short this?
No.
No. No.
Why not? But somebody said we will most likely slice through this LVN.
Not necessarily, especially if you're in an uptrend. They'll protect that area and use it to bounce and go higher.
It becomes our go long level because that's where, what does, when you have single prints, what does that indicate in terms of type of
Aggression.
buyers you had? Oh, it means aggression, right? So when you're aggressive, right, typically that means that there was some emotional folks involved, either emotional or really aggressive institutional traders coming in. I would say, do you guys really think institutional traders hit market buy of 1,000 contracts?
No.
I would say probably not, right? So typically it's driven by retail, institutional give them a bone, and then the retail's like, oh my God, I can't miss this opportunity. And what do? Well, they go super long, right? So if you look here, on this day, this is where I was kind of explaining the LVN, right? LVNs can be protected. If you remember when we talked about volume profile before, the LVN gaps can be a protection gap where they come in and just like here, they defended that. I mean, think about these candles here. Look at this, you have a massive green candle, blue, whatever, and then you have basically a bearish engulfing candle that comes in next. How many people would have been trapped here if I just put the low of this candle right here, and now let me change it to like red. What did they do here?
Spring.
Well, spring, but they took the liquidity, guys. Remember how an absorption is formed. I'm hitting market sell, and what are these other time frame participants doing here?
Buying.
So they're just buying, and the people that got trapped here, they're like, oh my God, we're going lower. Look at this candle, sell, sell, sell. They sold, and then look at these next. It kind of looks like a barcode, but you have a big green, big red, big green, and then of course you have continuation upwards. But the LVN or single print zone and market profile helped defend that, right? There was other time frame participants that defended that aggressive zone, and that's why I was leading you guys to the LVN question. What do you guys think would happen? So it's not always that it will slice through. I would add a little, call out there. If I have an LVN, let's say that there's a tiny one here, right here, if you guys, right here. So if I look at this, and is this a clean double distribution setup right here? So if I look here, in order to have a double distribution, what do we have to have in terms of TPO? How many TPO periods do you need to have?
Like 4 to 5.
Minimum 3. Below here, do you have anywhere 3 TPO periods wide? What that means is you have 2 letters. So what this means when you guys see this is that there's only, 2 30-minute candles traded at that price level. Okay. So, and that's A and B here for this day. So if we had C here, and then we decided to split this and say we're going to go auction or a higher, that means probably a double distribution day. You're going to have some single prints typically separating that. Okay. I think we had one just recently here, which was a little less. Do you guys remember our watch list here? What we talked about from this Thursday? Does anyone remember what the plan was?
Yeah, wasn't it the low volume node was like, I can't remember the numbers, and in between the double distribution and buy before it went through the bottom distribution, right?
Yep. So we talked about, this 34 level was here, if you guys remember, and we said if you do lose that 34, the behavior of that auction most likely would change. Do you guys remember that? We had the blue lines, like something like this. I think it was 34 even, if I remember. And that's because I like to buy on the retests of those single prints or sell, depending on what the context is. In this case, right, the context was that we were going to go back. They opened higher, then they came back right to it, and then they proceeded to go much higher. And now what they did here, right, so just think logically, if you're in a 4-day balance, what did they do here? This is our balance now, is it not?
They're going to trade between that range.
Okay, if I can just click, I guess. So the top line and the bottom is just the range that we're in. And a lot of people were short here, and a lot of people are probably long into this. Unless we gap this over, then there's a lot of poor structures from this Wednesday that we had, and we're still, believe it or not, trading pretty much in that range of that Wednesday. So this is our range right now, and the single prints helped us kind of trade in the upper distribution of the of that day. Okay, so this right here, this day that we had, helped us basically put a plan together to go long. And in the watch list, we said if you're able to go long here, we said you can make 30 points. How? Well, we looked at this, and you could do this many ways, right? So if you have TradingView, you have something called FRVP, which is your fixed range volume profile. You can grab that, right? And you can, just draw here in these 2 days, and I'm just not going to extend it so it doesn't grab the last one. And this was the area, right, that we were targeting, if you guys remember. We came back to 64, and we said, this was, I think, a little bit higher, 65 to like 74 range we had. We want to close the longs and then, be careful. And that's exactly kind of what happened. They went 34, bounced, but now what is it? What do we got? So if I extend this for tomorrow, what do we have? Is there a lot of price acceptance below?
No.
No, they're not really liking trading below here, guys. And that was the prior 3-day, 4-day balance that we had. They're not really interested in trading here. So would I say that there's a high chance that they could, if they can hold this level tomorrow, right here, let's say they break this 93.75, maybe they get into this value above 96, there's probably a high chance that we're going to auction much higher, right? And there's some epochs above to hit him, right? And a lot of people that got short in a bad location are going to be, covering. They're going to be either, they're probably already stopped. But let's say longs tomorrow, they can really kill them, right? Do this, they come back to this and then go higher. People get short here and then they're going to bounce and go higher, right? So the market generated information out of this is pretty important, right? When you think of price in terms of acceptance and a rejection. And this is what it looks like, right? So we're in balance. So now if we go out of that 4-day balance, we want to wait to see if they're going to defend it. Is it going to seek acceptance or is it going to seek rejection? It fails, and then we have a potential for our 80% rule all the way down. Does that make sense to all? Your question is this right here. Is the value being accepted or rejected? Is the value acceptance rejection, and is the price being accepted or rejected? I think you guys have to switch your mindset to ask yourself. What would be the 2 questions in terms of volume profile that you can ask yourself to help you determine how's the auction going?
Same thing, right?
Well, I would say which way is market trying to go, and is doing a good job in getting that way, right? If you guys remember, there's 3 components to measure the directional performance, right? But the 2 question is, are you trying to go higher, and are you doing a really good job getting there? And then the 3 components to measure that with volume profile is what?
Volume.
1 is volume, right?
Price and time.
Time. Yep.
What about value area?
Is it shifting up or down?
Okay, so the 3 components would be, is the price. So let's see, where's the text right here? So 1 is, volume, right? The second one is value placement. And the third one is what? Starts with letter V. You guys remember these?
Yeah.
If you're auctioning higher, right? And if you guys remember the way December started, let me just shift here to December for a moment. I feel like TradingView is doing updates or something here. Okay. So if you guys remember, we had December value that was really starting somewhere inside here, right? And I believe these are weekly profiles here now. So we started December and we built this little bit of value and we said, what did we say about December value at this time? Because it was pretty much like here. This was December value when we were doing watch lists and talking about it. We said there's probably some warning signs here. Do you guys remember this? And why do we say that? It's one of these components here that made us make that assumption. And remember, didn't we draw up something like this? You guys remember this?
The overlapping value.
Overlapping value, but what about the width of value that we had all the way till like almost more than half of December? We said, man, this is a pretty tight value. And I know this is December, right? A lot of people go on vacation, a lot of time off, right? Just holidays. But we said that the value, the width of the value is not indicating what?
Confident.
Participants.
Right? If there was more participants, they would have explored probably prices higher, right? Especially if it's initiative to the upside. And are short-term traders the initiative traders?
No.
That is correct. I mean, a short-term trader, me and you, cannot break monthly value area high by ourselves. Our 1-2 contracts is not going to cut it. Typically, it takes a lot more volume, and that's usually kind of done by institutional traders where they break value area high or value area lows. Those extreme levels of value is usually done by other time frame participants. Means institutional traders come in and do it. When you have a tight value area, that's not a healthy facilitation of the market auction. I mean, this is pretty tight to trade. You're talking about 613 to about 640 for about 20 days. That's not very healthy compared, I'm not saying it's not healthy for December, but when I look at previous months, 120 points, 130 points, and then, similar here. So this one here is getting compressed. When you have a compression, and we talked about this, it's much easier. I can take my kids for example. When they jump off the table that's not sturdy, there's probably a high chance they're not going to land the way they wanted to land on their 2 feet, right? Because it's much easier for them to tip that table over because the base of the table is not wide enough. And same thing here. The base of this value here was not really wide. They peaked above it, and a lot of people bid for this, right? A lot of people were excited. Yes, we're going we're going higher. They went long. They took their liquidity. Now, when you think about the, let's say, longer term auction, what is the market profile telling you? Well, this was our, value high extreme for November, right? This is our value high extreme for December. So if you want to be extremely bullish in terms of price acceptance and rejection, what is the level? I'm just bringing you back to reestablish this right here. What is it that we need to do?
You're going to have to get back above the highs.
Ideally, you want to go above this 43 level. If you do, you're going to crack new all-time high. You're going to crack this and go higher. If you get here, and this is our December value area low that we are sitting right here. If you can't get inside of here, what does that tell you?
They're rejecting that value area.
We're rejecting this value area, right? So there's probably, tomorrow's session this week is going to be fairly important, right? We have the January 20th coming, some political stuff coming in. So it's going to be important to see if they can hold this level. Let's say they hold this level, it's at, let's call it 59.80. If they're able to hold this 59.80, let's say this week, I would say there's a high chance that you can get 60 points run here. Would I look for longs here? Would you guys be interested in longs in this area?
No,
Why not?
because that's the fair value. It's a high chance of reject. Well, it's just uncertainty, right? It's not a good risk to reward.
Not a good risk to reward, but think what happened before. right? So this was the previous value that was created. Am I willing to initiate the price discovery at the bottom of the previous value to go long where they rejected pretty nicely out of 2 times? Not me.
No.
I will let somebody else do the discovery, right? So you let them do the discovery, they come back, and then they give you an opportunity to go long. Maybe they leave some aggressive, let's say on footprints, shifting. If they give you a little bit of aggression on footprints, they give us imbalances, they give us high volume nodes that are created there. Yeah, maybe it warrants a long after, right? For us to be good, successful traders, should you guys be predictive or reactive?
Reactive.
You want to be reactive. A lot of people lose their money because they're like, I know there's a high chance that we are going to be reaching this level, I don't know, 239 in the next 6 months. And solely based on, their mindset and what they see, and they're predicting where it's going to go instead of playing what's actually reactive to where they can go. We talked about, I'm just going to flip to Tesla recently. Didn't we have a good plan on Tesla on the same watch list that we had the plan to go long 34? Do you guys remember this drawing, this level here of 85-ish? Do we say we want to break above it, test, and go along and target 402?
Yes.
That was the plan. And that was a reactive plan. We had the levels to target. Did they go above our targets? Great. Who cares? Right? But you have to be, reactive and learn price acceptance and rejection levels, right? And in this case, the market profile is giving you that market generated information, or MGI, if you hear me say it. That's fairly important. But to understand what actually happened so far, this is not that bad, guys. So here, if I'm on continuous contract here on look at what happened here. I think they're giving you a clear message on the monthly time frame right now. Who can conclude what is that message? So we went inside October value. We came very close to that POC. As you guys know, I usually draw, I would say, a little bit zone there around it. But what are they telling you?
They're not interested in going below and exploring the value below.
Yeah, they're not interested. So as long as they hold this level, let's say 59.17 to maybe, let's call it 13 this time. As long as they're holding the zone, they're okay, because that means that this value here, they're building value. Let's call it larger time frame penthouse. They're building value here. Then, as tactical and day traders, right? Well, we have a couple of distributions that we can play with, right? So we know that ideally tomorrow we want them to hold this area because that's December's value area high. If they get inside of this, that means really we're rejecting this value. Then you have a distribution that you had from November here, right? So we could target the top of this one, which would be the bottom of the previous one. And remember, if it's the top of this one and bottom of this one, like I said, I don't want to be long here. I would target to close my longs and potentially look for what? Something like that, right? I would look to see if there's a look above here. If I get single prints in here on market profile, what would that tell me? And what is single prints?
Price rejection.
Anyone else? Why would single prints matter? What are single prints? I'm just leading you
Aggressive
slowly.
orders from bigger players.
Is it aggressive or limit?
It's aggressive.
Okay. What if I'm an institutional trader and this is my order sitting here at 188 to 202 right here, and you guys are coming in here and I have 30,000 contracts sitting here, and I'm at so if you guys think about I'm on the ask side sitting right here, and you guys are coming up here, and I just keep doing what? Am I an aggressive or a passive seller?
Passive.
I'm a passive seller. right? So if they defend that area right there, that would be passive seller with a massive order sitting. Some call it iceberg orders. You can call it whatever you want, right? People get kind of stuck on, oh, it's not an iceberg order, it's this. But then we have single prints that show up in the middle of the chart, and then you have single prints that show up on the top and the bottom of the chart. Does everybody understand the difference and how to use it? What does that mean? What is the difference and what is the meaning? I want you to explain single prints on top, on the bottom, and in the middle of a price action, like in the middle of a profile. What is that? How is it different?
Sorry, I didn't hear. What did you say, Shorty?
I said on market profiles, we have single prints on the top, we have single prints on the bottom, and then you have sometimes single prints in the middle of a profile, right? So if I hide this and I just look at these dailies, make sure it's daily, yep. So if I look at this daily profile right here, yep, so I have access on the bottom, do I? Are these single prints? And what single prints mean, guys, and for new people, is that you have only one period, like B periods alone. So if I switch this to candles, and I'll do that for you guys here. I'll just go in 30 minutes so you guys can actually understand it.
Could it be like a selling climax or a buying climax at the top and bottom?
It just means that other time frame participants are stepping in.
Got it.
Remember, in balance, in bracketed market, right? What I was trying to explain here earlier, when we're in trading in balance, are other time frame participants, where do they trade?
Outside, like on the SIGs usually.
They trade at the SIGs, at the extremes, guys.
Advantageous value.
At the advantageous price. Thank you, Erica. So as soon as, if I'm other time frame participant and we're trading in balance, let's say like this one, and I'm not going to extend it because we're not ready for that just yet. So if I look at this, and I'm just gonna, okay, let's leave this for a moment. If I look at this, right, this was my bracket high right here, and we went above that bracket, and what happened here? Erica, can you repeat the last thing you said?
Advantageous value.
Oh, so what's happening here, and just think of access. Unfair high, access high, selling tail is the same name for this period here, or letter K. And what letter K means, and don't ask me for what exact time frame that is, not that I'm dyslexic as it gets. I'm pretty sure I have it saved here. So letter K is from 2:30 till 3 o'clock. So between 2:30 and 3 o'clock, we enter this price range of, what is this? We entered a price range as high as 96. I think I was aiming for 95 final to this. And what happened? 92, like 4 points. Here, we found some sellers. It was an unfair high. Access high, unfair high, selling tail is the same exact thing. Don't get confused. I don't care if you learn from me or others. Some people will add twists to it. It's the same meaning behind it. And logically, what does it mean? If something is priced unfairly high,
they're selling it to you.
They're going to sell it to you. And if they close below that price, like we did, what is other time frame participants telling you here?
It's overvalued. The value's lower or elsewhere.
Yeah, it's an unfair high. There's access, and we're giving it to you. We have access on inventory. We're going to give it to you. Okay.
Shorty, is that why you were targeting the settle price to them to drop it after hours for the settle?
Yeah, exactly.
Yeah.
When you have access inside the bracket, like this one, I covered this briefly for this day right here, right? I think this was Thursday. We had access high here, right? That was sitting at 978. How important is this access high here? Remember, inside the brackets, when you're in a 3-4 day range and you have access high or low inside the bracket, does that tell you the other time frame participants are there?
No.
Not really.
Not necessarily.
Not necessarily, because when you're in the range, they don't find advantageous prices inside brackets. We do. Short-term traders look for fair value to trade. We like to buy something low and sell a little bit higher, but they like to buy it way below and sell it way higher, right? So here, if you think about this, this was the whole rip that they had, the bounce. This was the value area high here. Then they found a little bit of tail. The longer the tail, the more aggressive buyers or sellers are. So now when you look at this one, right, this one is about, I believe, 6-7 TPOs. Each box is called 1, right? So 1, 2, 3, 4, 5, 6, so on, maybe 15. I don't know. I'm just gonna throw a number out. So this is pretty aggressive. As long as it has more than 2 of these, right? As long as it has more than 2 of these here, 1, 2, what does that mean about the auction? If there was only 2 here, and then let's say letter M was here all the way down, is this a completed auction?
No.
If there's 2 periods that are single prints here, is this a completed auction?
No,
Yeah.
essentially.
The auction is considered completed when you have more than 2 periods. So if the letter K stopped, now let's say letter M was here, that would be considered completed auction. If this K was by itself here and it had a letter next to it, let's assume this is letter M here. Is this a completed auction, or what is this called?
A poor high.
That would be a poor high. So the difference between access high, unfair high, selling tail, and poor high in market profile is that when you look at these market profiles here, and now I can split it so you guys can see it. Here, only one time in that 30-minute session we auctioned with this period here. So that's telling us any other periods we're not able to do what? You're not able to get the price up there. Does that make sense to everyone on YouTube? Any questions? Does everybody understand the difference between access high and poor high now? Is there anyone that doesn't?
Yeah, that was helpful. I have a question when you brought up the excess inside the bracket. Is there any world where an excess inside the bracket could be a hint as to how strong, when you see an excess at those SIGs? Or is it always just, hey, when you see an excess at the SIGs, other time frame participants, or high likelihood that that's what we're dealing with and play accordingly?
I typically look for access to be above a key resistance and below a key support.
Okay.
But
inside the bracket, there's not too much it's telling you.
It doesn't. I mean, here, let's just look at, if I combine these profiles right now, let me just combine it. This one, I'm gonna merge this one here, and I'm gonna merge this one. Tell me I want you to tell me where is this access from Thursday once it TradingView decides to process it. And my new PC is coming in 4 days, so I'm super excited. Let's just increase this, see if they.
I mean, even looking at it, there's not much.
Okay, here it goes. Finally, tell me where's the access on the Thursday? Where is it?
I mean, at the very top, there seems to be 4.
Well, let me give you this view. So you said, within the range when you have access.
Oh, within the range. No, you can't tell. It just looks like a regular. Nothing.
It's right here. And you see that we've explored that area quite a bit. And this was your access that you were talking about.
Got it.
It was just a level inside the distribution. Honestly, was it important? I would say probably because of this, right? If I was to grab this right here, and you guys know I do this a lot, if I was to look at this FRP and not extend it, I would expect this to hit the POC or something nearby. And let's see, and it hit very close to the POC right here, and it rejected. And that's one of those setups we play, I would say, in the volume profile world. When you're coming and you reject and you come back for the retest, that becomes a good short on the first step. And it was, right? That's a high volume node sell-off. There's a lot of volume. We sold off from there. We came back for a retest and then another sell-off that put in a lower low. So this supply here has been pretty good. Well, now think about what happened on this date. The left has the 4-day axis here. And you see that it has I would say it has a nice ledge at, what is this, 93.25. A ledge means that there's multiple profiles. Imagine if there was a letter C here as well in this little space. I'm horrible at drawing. Like imagine this is letter C. That would be a really nice ledge. And what does the ledge indicate here on market profile? If this was true, that would be what? What would you guys call it? Like, was that a good for bears, bad for bulls? What is it?
A poor high, good for bears.
Well, it would also mean, you know, it's really good for bears because a ledge indicates exhaustion on buyers. If you're not able, if you come to this level and you're not able to auction 3 periods or 4, and if in case we could imagine that, imagine the whole stock market in the world, whoever is trading it, you're coming to 93.25 and nobody's able to bid higher. You're coming for 2 hours and you're not able to go higher. That indicates you don't have any buyers. You don't have net new buyers, which would indicate that there may be that this was here a short cover rally. Remember we talked about if we get a short cover rally on watch list, why we targeted some of the levels to the top side? Does this start to make sense or no? Did I lose you guys?
Oh, it does.
Okay. So now if you think about, you know, access, so you created a massive access here. And I would say, you know, if you're new to market profile, don't be focused on daily access highs. I would say go look at, you know, weekly access highs or monthlies and see where they sit. I would, you know, for a lot of new traders, and I'm not trying to be rude, but a lot of you guys are in a rush to make money. This is the only business, only job in the world that's going to let you make unlimited amount of money, but you have to be patient with it. You have to absorb and you have to practice and you have to gain your confidence. A lot of you just want to hop in and man, I did not make $1,000 that day. To make $1,000 in the real world is pretty difficult. And it's just a number I threw. Some people, maybe it's hard to make $1 million a day. Different professions, different entrepreneurs, right? They make different kinds of money. Right? I was reading earlier, Messi was making $15,000 a second playing for Barcelona, right? Maybe that's the reason why they can't register any players now because all that money's gone, right? So mismanagement of your risk, of your capital can lead you not to be at the playing table. Don't be in a rush to play, 5-minute, 30-second charts. Zoom out and understand what is really happening. So if I look at this blue box, which is my weekly profile, what is this telling you? This is pretty good, actually. Let me just remove this. We have something here that I typically love trading, and I want to see who can see it. I'm just going to hide. Do you guys see it? This is one of my favorite setups here. It's coming up tomorrow.
The double distribution?
On this sell-off, I would say this is a liquidation profile. The trap on the top. This value area here, low, is right here. Right? Which matches, I would say, the last week's value area high. The week prior to that value area low is right here. What happens now is that they're inside of this area and they close inside of it, correct?
Yeah.
So Now think about what would happen if we lose this value area, right? So if I reject this, I'm just going to draw it from here to here now to see. A lot of volume was inside of this area. So can they go, an auction higher, which leads to that 6, 11, 15 area that we talked about earlier? I'm only grabbing a couple of weeks, right? I can grab all the way here and we know where that POC is going to shift. Pay attention where the POC is, 697. I'm going to extend it to November 1st. And POC did what?
Ooh, went to that value low area.
So we shifted the POC from the top to the bottom, right? And from here, I'm just going to turn on the candles for a second. When we went here, what happened? We had a gap down. We proceeded to go below the value, right, of the first sig. And we talked about this. If I go 95, let me enable this one here. 95 just means second standard deviation for those that are not familiar. We went to the bottom of the second standard deviation of this 2 months balance that we are in, right? This is your swing low, this is your swing high, this is the balance you're in. Now, when you look at it week to week, this zone here is what? Fairly important. It's fairly important for our Monday to come, right? If you're able to hold this level, that means you're rejecting the lower prices here, which were up here before, and you're seeking to build value. Would I look to initiate a lot of longs at 615? Probably not. Right? Would I want to, if they hold this level tomorrow, let me give you a scenario. They go here and they reclaim this level. Should I short here?
No, I'm going to long it because you get, at least to the PLC up there.
This is your setup for a long you're looking to go. That means they're rejecting this price again and they're giving you fresh information. They're not interested in price here. If they're not interested in price here, we got to look for what? Why do we auction higher? Why does market go higher?
Looking for sellers.
We're looking for sellers. And if the fairest price for the past 2 months is at 615, do you really think we're not going to get there? Going to become a magnet. We're going to drive that auction to the fairest price because people like fair price. Do you guys like fair price?
Love it.
Yep.
I mean, if you don't, fuck it. I'll increase the Discord to $1,000 a month and see how many of you guys stick around.
I heckin' love fair price.
Yeah, I mean, you have to find the fair price of a product or whatever you're trading. So most likely, watch for this setup tomorrow. You want to see them come here, and I would look, whatever we have in between. I'm sure we have some levels we can find on the dailies. You want to find where's that level they can bounce. We look at the footprints, and what do we want to see on the footprints tomorrow if we come to a level? We want to find some delta where they initiated that trade somewhere here. So let's just kind of zoom in, right? If I go here right now, look. If I go here, there's a little bit of initiation right here. They initiated on this candle. This one's even better. So now, tomorrow, man, just give us a retest in this zone. Pull us back to 76. Scare everybody out of it. Dip below the 69. Reclaim the half of this. Or reclaim this value area low of the prior week. 75, man, it's a rocket. And that would be what, 30 points again? I know you guys hate 30 points 2 days in a row, but I would take that. I will definitely take that and drive it somewhere like right here. That will be the ideal. Would I be cautious of this level here at all? I want to see what's your feedback. And what is this level? For YouTube, I'm watching your comments as well. What is this level here? Why is this important? If I'm taking this level long, should I consider this as a profit target at all?
Definitely.
Yeah, that's the ledge. That's what they couldn't get above before.
Yeah.
You want to make sure that you trim at that level. Because if this is our access high on a weekly, that means on other time frame, weekly time frame, we had other time frame participants step in and defend that level. And that's an important level to carry forward. Okay, so I went long way to explain access high, and it's similar like what this slide would show here. Selling tail, single prints at the top, right? If it's 2, that means it's not aggressive selling. Most likely it's going to be broken. If you look at this, this is a really strong poor low here. It's probably crowded poor low. Usually poor lows tend to be auctioned away from, but they get to be revisited because that means the auction was not done completely. We don't have a winner. And same can be said on the upside. Does that make sense? So is everybody able to distinguish a difference between access high, access low, and a poor high and a poor low? Is there anyone that doesn't? If it doesn't, I don't mind repeating it.
Shorty, could you just tell me like which one is completed and not completed auction? I didn't understand. I don't know why.
Yeah, so here on, if you look at this, this is a complete auction. When you have access, that means you met the sellers, you completed the auction, right? If you look at the bottom, you also have a completed auction because you have TPOs that are more than 2 TPOs long. So you have 4, 1, 2, 3, 4 letter K's here below. Okay. 1, 2, 3, 4. If this line and this, what is this letter, let's say letter J was here, 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 and it left one period, one box of letter K below, that would be a poor low. And those, I know we auction away from it, but you're looking for potential revisit. So you're looking for a short spot to come back and revisit it. And I think we have some on a daily that you can see here. Let me bring it up. I'm just gonna hide weekly for a second. And we gotta reset all these merge profiles. Okay, so let's zoom in for a second so you guys can understand it. What about this right here? What does this tell you? I don't know what thick size I'm on, probably too big, but that's fine. I think even on one, it'd probably be a poor high. See what it zooms in. You see this where you have 2 TPOs next to each other, equal? Is that a access high or poor high right here?
Poor high.
Poor high.
Is it still poor high? I'm on the tick side. Is this a poor high or is it an access high?
Poor high.
Still a poor high.
Yeah. Yeah, you
So
said
still
3, right?
It needs to be 2 or more. 3 is
2
ideal.
or more.
Right?
Okay. Okay.
So this is still a poor high, right? This is a poor high, and typically it involves that we're going to have an auction that's going to go below, and most likely we're going to fix it. And there are some setups, right? So you have access lows here, access lows got cracked, and then you have another access low here as well. On this day here, this was a pretty good day because it was telling you a lot of information about the market. It had single prints in the middle. And they're right here, right? I think it was D or, yeah. D period had single prints here. Just going to extend it right, bring back candle so you guys can see it. So here's our single prints. What this day was telling you is what? You left a poor high here. Now think logically. We don't like trading in the distribution on the top, right? Because you left right here. You had a distribution here, obviously this guy right there. Then you left single prints, means some institutional traders, emotional sellers came in, right? And halfway, the halfback of this day is like right in there. So now you cracked below this distribution, and what most likely is going to occur is that you're going to look for value lower below this one. From here to here, you're not interested. You're going to go lower. And you see that they kind of swept the lows of that. I think it was Monday. They swept the lows and they started building value. And a lot of shorts were piled in here. What did they do the next day? They gapped over it. They gapped over it. They hit the POC of the accumulation. They cracked the lows. They put in new lows. Then they created another zone where they accumulated. A lot of people went short probably on this candle here. And then they got destroyed following shortly after. What this poor low, sometimes it doesn't work. What this poor low told us that eventually, as soon as you go above this level here on this split of this value, of two zones, you're going to fix this. You're going to fix this market auction because it was not closed properly. It was a bad business. And look what they did here. Did they fix it? Is this fixed?
Yes, definitive.
Yeah, this is definitely fixed. I mean, the single prints in the B session, usually A and B single prints, I tell you guys this a lot, typically tend to hold. If you have single prints in A and B session, they typically hold in that direction. If you have A and then B comes in and they leave single prints on the bottom, most likely you're going to auction higher, and maybe you have a neutral or a trend extended typical type of a day, and that's what they did here. I would say they probably had a trend. Yeah, they had a trend day here. So they fixed it. So you can use the poor highs and poor lows as targets once you have some reference point that's pivotal. And for this day to this day, this was pivotal. And you see again, they cracked below this level, and look what happened. Look at these three here. Tails, tails, and what did they do? They went all the way below, right? They went and they cracked a prior day low as well. Once they reclaimed that zone here, look how well that worked. So if you look at this zone right here, look what happened. Now think about the pain. A lot of people went short, probably here Thursday and Friday. And what did they do over that zone? Well, just gap, similar to what they did on this one. So now, let's say they lose this level to come tomorrow. Remember the zone that we identified on the weekly time frames? Most likely we're gonna auction lower. Somebody go mute, please. Ashley.
Juan Velasco. Okay, he muted himself.
No, I muted him. So now that becomes a very, very important zone for us, right? If we can crack that, that would be great, right? So I am here on the monthly time frame. So here's your December. We want to hold that 80, 81 monthly time frame. You want to hold that, which kind of corresponds. Does it correspond with the weekly time frame that we talked about, or no?
Yeah, it's close enough.
Very close. So if I switch this to the weekly, remember we had this triple stack here. You had the value area low, and then you had the value area high, so it becomes a pivotal zone here. You can hold this, you have a chance to run. And then you have also some single prints that are starting somewhere around 47 or so from the week prior, right? Because that would indicate, again, same concept. You target this. If they crack above that, well, most likely they're going to go to the top of this, and I would most likely target this level somewhere around here. This 9 to 11 zone, I would not initiate new longs here. Like this would be not the area to initiate much. Does that make sense?
Yes.
Volume profile is 68% of what, Miso? So it's 68% of volume for that day. So if I go on an SVP session here and hide these, so this is time. So if I look at this day, for instance, I just have to shift time. If I shift this to the left, I go a little bit smaller time frames. You'll see it now. So what this is telling you is that 68% of volume for this day was in this price zone here. It was between 96 and 59.75. 68% of volume was conducted here for that zone. And that makes it a fair value for that day. When you look here below, 68% of volume was done right here. And then you see this one here. This is a little bit of a tricky profile. This is a compressed B, usually traps the shorts. They compressed, they went low. Once they regained this, they gapped, and that was a short cover rally triggered. Okay. Does that make sense? Access lows, poor highs, poor lows. And each letter just represents 30 minutes of price action. Okay. So letter A is price. Where did the price go between 9:30 and 10? That's what's represented for each one of these letters, right? A lot of people get, intimidated by the letters and what's shown there, but it's really not that. It just replaced the 30-minute candles with letters. And I think that would probably do it for you. So let's do this. Come on.
So excess means completed auction, Shorty?
That's correct.
Okay.
So here, if I split this profile here, and this is called compressed profile, if I split it, in trading you go under TPO and expand the block, and it'll give you a compressed view and an expanded block. Now you can see the first 30-minute candle. You see that this 30-minute candle is the A period, and it traded at the lows of 38.25 to the highs of 5966. The B period's a little bit lower, which left a poor high between periods, right? And then it left a massive poor high between A, B, and C, and it left access low here. So it looked like the B period was indicating what? A rip, right? So usually, when you have an access in A and B, you usually go with the flow. You want to go in this direction. And then the Europe started buying in the D period, and you see, this was your initial balance high, and this is your initial balance low. So that leads me to the next point in class. So IBH and IBL, right? Initial balance high is just the first 1 hour. So if I go 1 hour and I grab the high and low of that candle, which will be here and here, this is my IBH, right? So if I enable this initial balance kind of indicator, look, it's telling me here that this is our IBH and IBL. And what that means, it just sets the tone for the day. This is our initial balance for the day. The first hour sets the initial balance. And there's certain setups that we play regarding the initial balance, whether it's expanding the balance or staying within the balance dependent on prior day's value. It's important, right? The wider the balance, is it most likely to break that or not?
No.
No. If the balance is wide, and how would I know, right? So today's balance, this balance here was 31 points. 20-day average is about 28 points. So I would say, we are right within the average of that. If the balance, is, let's say, somewhere at 12 points on that day, the first A and B period, you can certainly expect what? An expansion, right? Most likely we're going to expand out of that. Means that it's going to pop to the top or the bottom, and you go with the flow. That would be your C period that's breaking it.
Hey, Shorty, quick question. Do you no longer look at the opening range and just look at the IB?
I do, yeah. I look at the opening range. I do look at the opening range, right? I look at the opening range, the fibs. I take it at 30 minutes, and then I look at the, the first 5 minutes. What is it that they do? How wide? And then I also pay attention to what kind of auction could it lead to, especially if you're opening. We talked about this. If you guys remember this 34, I think it was Vince or somebody else wrote in the chat that they were trading this. It was also IBL, and we covered it in the watch list. If you guys remember that 34 to 21 or 26ish area, I think it was 24, but let's see. Anyways, this little LVN here, this was the IBL. It was also the POC in that area, and that's where the access low was created for this day. I do pay attention to it. Yeah. Does that make sense?
Yep. Thanks.
Yep. All right. So then, you can break down these periods, and you can see, how the lunch compressed the price action. They created value here, right? You see that there's some value creation, for what? I would say 1, 2, 3, 4.
Stunkman has a hot mic. Sorry, Stunkman hot mic.
For 4 periods, right? You created balance higher, and then you broke out of that in H period, and you're holding the low right here of that, which is somewhere around here, that E high. And you came back in the M period, and basically you stayed inside. Right. So as of right now, you have a pretty good, you're shifting the balance. And is the value catching up with the price? Does this look good?
Yeah. Yep.
This looks good. They accumulate it, go up. It's kind of like stairs, right? They're not leaving a lot of poor structures behind. So it's pretty good. That makes sense. So initial balance is just your first period. And on TPO charts in TradingView, it's this initial. So if you go here, you can put the initial balance range. You know, the default is two periods, A and B. You can definitely change this if you want to change it to 4. I don't know why you would, but keep it to 2. That's the first hour that sets the initial balance. Okay. There's something called failed auction, right? So we talked about that, but there's also IB failed auction, which is, if you're new, don't confuse yourself. If we break the IB and fail to hold for 30 minutes, then most likely we revisit the opposite extreme of the IB. So what that means, and this happens lately a lot, right? So let's say we broke this IB here, and you see how if the E period was not able to auction here higher, let's say this E period closed, but then the F period went below this IBH, which was 65. That would be considered a failed IB, and most likely, if you fail somewhere around here, they're most likely going to visit the IBL right here again. In this case, they did not. And there's also, some rules and statistics, right? If you break this IBH and you stay above it the first 30 minutes, there's an 88% chance that this low of the day has been set. How can that help you? Anyone? If I tell you, hey, the low of the day has been set, how does that help you as a trader?
So if
You don't
we
want to
get
go
near
long.
it, we'd go long?
Yeah, when they give you an opportunity,
Exactly.
and they give you an opportunity to go long, the odds are in your favor. This is about probabilities and odds. This is not about your feelings or your wife or your husband, what they think. It's about market telling you the odds and generated information. So this would be a really good entry, an IBH to go long on a retest. Or if you just look at the volume profile in here, look for a high volume node in between, which would be somewhere around here. And you would also have some, I would say, if you go on the smaller time frames. Let's see. If I go here, and now you're able to see, right? So the volume profile is sitting at the top. We have a couple of nodes. So if they come back for the retest somewhere in the middle right here, not a bad long. And there seemed to be a decent long here, 81, kind of 92. But this is right before the close. So remember, time, price, opportunity. 5 minutes probably not enough opportunity for your trade to play out.
Can you say that rule again on how you see the low for the day?
Yep. So if you think about IB, if you spend 30 minutes above the initial balance high, right, and you don't creep inside of it, like you don't crack auction inside of this candle, let's say went inside this period and they closed above, that would mean it's a failed IB. So this would be failed IB, and most likely there's a high chance you're going to go here. If you close this E period, in this case, this one here, you close it above this level, there's a high chance, 88% chance, that this low is the low for the day. So let's say they give you something cool and they drop it in here. This becomes a very good long, because if you put your stop loss here, 88% chance you're going to make money on this. And you most likely find some volume node or some target to take it off. And same is true for the opposite, right? So if you go below this, right? Let's say you're holding the low here, and you crack this, right? What does that mean? And you close the next period here and the next period here. What does that tell you about the high of the day? It's set. There's an 88% chance that this high of the day has been set. So that means when you come back and reset here, that we can find an opportunity to potentially short it at the level, because we know the high of the day will be set. It's in the PowerPoint. I think I saved it here. Let's see. Okay, let's see. Talked about this.
And you can think about that because since they cracked that initial balance, they're more biased toward the side that they cracked, right?
That's correct. Yep. Okay, so I think it's let's see. I didn't save it here, but I'll post it. I have it set up here. I left some examples for you guys. I'll post a new PowerPoint so you guys can kind of go through it. And if I go through it, you guys will not learn anything. If you go through it based on the knowledge that you're at least receiving now, if it's considered knowledge and it makes sense, then you want to go, next step is go on the charts and look at it, right? See if you can find the same setup on the charts as well. And this is kind of the extensions that I was talking about here.
Shorty, before you said that the IB, the average IB is 28 points. Did I get that right?
Well, that changes, right? I mean, it's not set necessarily by me, but right now the initial balance average for past 20 days is at 28 points.
Okay, thank you.
Yep. And on Friday we had 31.75 points. So it's definitely an anomaly. So if you think about this, right? If you think about IB and how it's, breaking. So if this is our initial balance, the 100% of it, then we know that basically the double of it is right here at 5997. And the odds of this happening right here, what do you guys think are the odds of happening double of initial balance? Like somewhere in between would be the 1.5. Let's see if they have it. They don't have it here, but basically this would be somewhere here.
I don't know, lately they do it a lot.
Okay. When you have an IB like this, there are some odds that people track. This is not me tracking, this is just the knowledge. To hit the 1.5 IB, there's about 40% chance you're going to do this, right? And to hit the, the IBX2 is about, 20% chance, and then IBX3 is a lot lower. So you can think of these as almost like a bell curves, right? The higher you are from the IB, the lower the odds that you're going to get there. And you guys know the trend day is only formed when? Is this a trend day on Friday?
Didn't hit 2 times the IB.
Yeah, it did not go. It needs to go above it. Staying within the 2 IB, it's being basically an extended typical day, right? So now it's pretty clear, right? Even if you look at this day here, what they have to hold. Because there's a lot on the line for them at a certain level here, and you guys will see it here. So take a look at this now. You have an IB. You have, if you guys look closely enough, what is there in deep period?
You a little single print there.
There's a little bit of single prints there, right? So I would, as a day trader, you would be aware of this. And why you would be aware of it, it's IBH, the halfback, which is just the mid, 50% of that day is right there. You have single prints, which are basically splitting this day into two distributions. This bottom distribution, which they spent a lot of time in, and then this distribution here, which they also, so if they lose 81, high chance they go to 65, and I would not go short here. What would I do here?
That's a definite long, and then stop below the 50%.
Yeah, you could do that. Stop below 50%, right? If you're targeting something like this, right? I'm just giving you kind of the reward. If I'm going long here, and let's say I target 81, well, and the mid is somewhere around here, like I can afford, statistically speaking, I can afford a stop loss all the way to 60. If I can afford this right here, that would be really good. But the reward is, I would say, not in favor for long-term success, 2-1. Okay, so something like this would probably be okay, right? Probably right below this supply here, 59.75, and you're getting close 3-1. And does that mean you have to sell everything here? Probably not, right? That means that they could potentially go all the way to the top. And if I'm interested, I could look at the volume and see what is volume telling me where we could go, right? So I know the value area low is a 70. So this becomes kind of like the buying zone right here. And you can see here as well that these, double TPOs are all the way up to here. So 70 to 65 would be a potentially long zone because this right here is value area high of it. This is the value area low of it. So typically what they like to do is peak below and somebody else comes in, like advantageous people come in and they go in here and we could target even this guy right here, which is the fairest price for whatever, second half of the day. This is the fair price. So if I'm doing this, well, this makes it a really nice trade. And I'll probably target this for tomorrow. Does that make sense?
Yeah.
Okay. So we covered the excess high, the basics of market profile, the poor highs, the poor lows. I would say the double distribution setup we went over. The one thing that you guys have to remember is if you have an M period that leaves excess tail, it's not tail, it's a spike. Does everybody recall that?
Yeah.
So sometimes I give you guys a curveball and I ask you, man, this axis here looks good. And typically that's not axis, it's just it's a spike that needs to be revalidated, right? So if you guys think about this, the spike period is M, right? And that's 3:30 to 4. As you guys know, we have some crazies in the Discord that give us the power hour memes, and they also give us the spike memes. So between 3:30 and 4 o'clock, usually, if the L period made a higher high than a K period, there's a high percentage probability that you're going to get a spike, especially if the A period high or low, whatever, spike higher or lower is close to that L period. There's a high chance you're going to get an M period spike. And if you look here, this was the A period high, and this was your basically IBH, correct? And IBL, it was here, which looked at this point, maybe I cut it off, but let's say it's poor low. They had a spike here. The L period made a higher high. And then as soon as you crack this L period, that's where your spike is going to be. And spike is basically where you find the highest period. In this case, it was L. And when the M period goes above that, that'll be your base spike. And your base end is your, call it PD8 or high of the day, only till 4 p.m. The end period does not matter, okay? End period is your settle period. It's the 4 to 4:15, and that arrow indicates where the price settled at 4:15. It also helps because of SPX options, right? And SPY. Does everybody understand this? It can be intimidating, but it really is not. We just look at the M period to see if they try to push the price higher or lower than the range of the day and see if they extended in that last period. If they did, then we need to make sure the letter A period the next day is carried forward and it tells us if it's rejected or not. Let's say if we open above this spike base right here, let's say we open above the 52, 57, 50, okay? If we open above that, that's bullish, semi-bullish. If you, let's say you gap up and you open above the spike here, the spike end, that's, I would say, probably extreme bullishness, and we're going to continue. The auction is going to go higher, right? This would be a bullish spike. And I have, annotations here what that means. And I like trading spikes because they work a lot, right? Especially if this spike is rejected, what would that mean? Where's that level if the price is rejected?
Spike base.
Yeah, spike base rejection means that that M period spike that they had in price is not being accepted, means that we're most likely going to go lower, probably back to the mean. And that would be somewhere in this case about 10 points drop, right? If you open below the spike, that's the rejection. Open here, you're accepting, and above, it's really, really bullish indicated by colors here. Does this make sense?
Yep.
All right. Here's a bearish one. All right. So you see the L period did what?
It's in the decay.
They made a lower low than cape, so it gives you a really high odds that you're going to have a little spike. And sometimes, and a lot of times, because it's, you know, time is not a lot of time left, I like to play those on a scalp base towards the end of the day if I'm interested to make a couple $100. If the M breaks here, and it's really quick profits. And especially if you have a good level for support for exit, take your money off on spikes, right? You don't have a lot of time, 30 minutes is not a lot. And usually the next day you have a good setup. And here's the notes again on how to take this, right? How do you find it and what does it mean? And based on this, you're able to take the next day and it gives you a lot of confluence points. Where do we open in relationship to the prior day value, right? If you're obviously above it, that's great. The spike base would be bullish and you go on. If it's a bearish spike and you're opening below the spike end here, if I'm opening below the spike end, would that mean that we are rejecting the spike? If I open here, is that rejection of spike?
No, it's accepting it.
That's acceptance, right? If you're open below the spike on a bearish right here, that's really bearish. If you open here, semi-bearish. If you open above the spike base, that means you're rejecting this price action that came in the last 30 minutes. Like right here. I was trying to get a pen. Like this right here is your spike base and an end. You open in here, semi-bearish, open below, auction below, very bearish. Open here or open here and go above, you're rejecting this spike here. That means that this will become what the next day? What do we count this as next time? If we go higher, we go here, we go higher. What does this M period come? Would you consider that access low then?
Yes.
Yeah, it becomes your access low, right? So it's important for us to know what that is, right? And how it behaves. We talked about initial balance. Is anyone confused about initial balance? Okay. This is your wide initial balance, and why I was talking about that is this piece here. It's about probabilities and percentages. If you have access in A and B period, it holds 78% of the time. If you don't trust me, spend an hour today and test. On this day, we had access A on the bottom. Did we breach it? And count. Say yes, no, and then do the odds and see how well does it calculate. Who wants to do that? So that's your homework, to figure out if this is true or not, so you know to have confidence in it or not. And this is what we talked about earlier. If you have a narrow initial balance, there's most likely something coming out of that. Something meaning extensions, potentially trend days, or maybe double distribution day typo coming in. Okay, this is poor high. I give you a lot more information on how to trade it. And this is not only me talking and you, oh yeah, I got it. This is also you taking this PowerPoint and going back to charts and looking and seeing the setups. There's at least 15 people that I work with, offline, one-on-one, where they send me every day, they send me a chart and what their plan is based on the teachings. And I would say most of them have been consistently green. And that doesn't mean every day is green, but they have losses, but they're mostly green for the week over week, month over month. But that's because they take it and they apply it. A lot of people that want to learn something, they just take it at the grain of salt like this. And it's like, oh, I learned something, but without applying it. You got to apply it. You got to learn. There are some tips here, right? Short-term trades are typically taking trades around these levels. Most of them, they're trapped long or short. So when you have a poor high, typically that's because somebody was like, oh my God, we're going to make higher high on a market, buy it. And then they, from poor high, they tend to auction lower and then they go and fix it. Just like I've shown you moments ago. There are two ways how poor high and lows work. One thought process, the price will auction away from the poor high or poor low, trap long shorts. If the poor high is carried forward to the next session, meaning that we didn't fix it that day, there's revisited, the odds are in your favor they'll break the higher and fix the poor low. Did we just show you that just moments ago? Let's see this card. Did we cover that just moments ago? On the date type here? Let's see. Oh, I probably should have done this because I already had we had the poor high here, right? Was it carried forward or was it fixed intraday on this day here? Right here. This is your poor low. So what happened? Poor high, sorry, I'm dyslexic.
They fixed it the next day.
Yeah, so it's carried forward. So if you think about what I was talking about here, if the poor high is carried forward, the next says meaning we close with poor highs revisited, then the odds are in favor they will break the higher high and fix the poor high and low. Well, boy, did they fix it, right? They did. They came here and they really, really fixed it. Then you have this poor low that was on the bottom. So which one did they fix first? If I hide the candles, let's see who's following. Which one was fixed first? The poor high or poor low? How?
Poor high. We opened, like I said, A period, and they fixed it on B period.
That's correct. So A and B, they fixed it between 10 and 10:30. This poor high was fixed. Then they trapped everyone that was long, and then they said thank you, and then they came back and they fixed this poor low as well. And then they had access here, access low. They gapped, so on. They fixed this more, and now they gave you guys something to think about over the weekend. They have access high here at a really, really crucial zone for tomorrow. Okay, so not the best spot to initiate longs unless we gap up, reject 15 and come back, then it becomes somewhat decent to go long. But remember, 615 is a 2-month POC. FYI. Okay. Crowded poor high, so it's the same thing. So just think of a crowded poor high and poor low. If you see candles, right? If you look at this right here, right? Let's say, how many people do you think were, not so good at it? But let's see. I'm aware of it. Doesn't this look like a beautiful bull flag? It's close enough, right? It looks like a perfect bull flag that basically is starting. You have a bull flag and a value shifting placement. So most of the time I would think they wouldn't work because they would be trapped for, peak above and fails and continue lower, and they did. This would be a crowded high where they're, when you think about it, we opened here, right? And we closed pretty much where we opened, right? So we did not close higher, and this becomes a crowded high where there was too many longs at the top. And that's where the bracket continued. Then you have a crowded low with the poor low, and what did they do? They auctioned away from it. They delivered a pain to the shorts. They delivered a pain to the longs. And then they cracked both sides, and now we're back to the extreme of the 4 days. A lot of people like to take position at the wrong location, short or long, right? We all do. All right, let's see. So poor high, I'll give you an example about this, and I kind of annotated with numbers, May 6th, and give you a little bit of more notes. With the failed auction, this is confluence, right? On how you can play this. So you can kind of go through it and see if that pattern repeats, and I'm sure you'll find that it does. This here is fairly important, whether you're new, old trader. This should be your printout chart, should be this. If you're not in a Discord, take a screenshot, but please don't misuse it. At least give credit where it's due. This is not only, it's not coming from my head. I also learned this. Peter Stadelmeier is the one that invented this. Jim Dalton came after and kind of revamped the market profile, but Peter is the one that really did this. And the CBOE, like he was the first one that conducted a class, right? Not like 1986, 1987 to the floor traders on market profile. And this was definitely, the big portion of it, like normal variation, trend days, double distribution, neutral days. Because between the current day, let's say Friday, and when Monday comes in, where we open on Monday in relationship to the prior day value area range really is important because it can tell you a lot, right? Then you have the initial balance that tells you a lot as well, right? So if you think about this, I touched base on every one of them. Like initial balance is not wide, and typically we have excess formed within A and B periods. And normal trend day, right? What Erica was talking about, range extensions are typically well over IB2X. Did we have that Friday? Let's take a look. This is your IB2X. Let me make sure I have two initial balances. This is the IB. This is your extensions 2.0 and 3X. Did we go to 3X? We did not. We did not auction there. So was that Friday a trend day?
No.
So it's not a normal trend day. So tell me what type of day it is. Read this. Tell me what type of day is this right here.
A typical extended. Oh, read this. Sorry.
Normal variation were extended one side of the IB.
Something like this. Right?
Yeah. Normal variation.
Control is divided. So we have some other time frame participants in there. Well, how do I know there's other time frame participants on this day? It's a trick question. So I'm testing your knowledge right now of this class.
Where's the volume?
Extended the IB.
We extended the IB is one. Good job. What is the other reason to me to believe? Remember, IBs don't get extended by me and Erica. We don't extend the IBs.
We're above the previous day value area high.
You are? Okay, let's be here. What else? For
They
this day,
stayed above it.
focus on this day alone. What is that day telling you that there was other time frame participants coming in? Can me and Tom, can we, or Texas Rush, can we drive single prints? Do we typically drive these?
No.
No.
No. Usually there's other institutional players, other emotional, heavier traders that come in and they drive this. They did that. They did that this day, right? So if you think about this, control is divided, so you have the split. So you have short term, but you also have other time frame players in step 10. It's important to know that. If extension is excessive, long term is gaining control. Is this excessive?
Yes.
It is. Yeah, the long term is gaining control. So the short term traders that shorted this, what happened to them?
Ouchie.
Ouchie is the correct answer. They got pain, right? And that's okay. Pain is normal as long as you accept it. Balance to imbalance and then adjusted balance. Did this work? What does this balance? Did this occur?
Yes.
You had balance below, imbalance to balance to another imbalance to balance. So that checks. Balance is not as wide as it is in normal days. Normal days, pay attention to this, entire range, roughly 85% of the range is set during A and B period. I don't think we can say that. A and B is right here, and that would be what I think we said it was 28.75, no, 31.75. points was between A and B. That's A and B extension right here is 31 points. So a normal day, that would have been good. This would have been normal day if what happened? Please answer.
It went back into the IB.
Thank you. If this level here held and we went back inside the IB, we have a normal day. So this makes it a normal variation day. And all we did is process elimination, eliminated every bullet, and it leads to this day. If you think about confidence of type of days, which one is the most confident day?
The trend day?
Okay. What's the second highest confidence day?
The normal variation?
I like open test rejection.
Open test rejection would be auction type, right?
Oh yeah. Sorry.
So if you think about the days are here. And if I was to kind of lay that over, look at that, the confidence now. Neutral, I mean, you have an extension on both ends. Have you had these days lately? Neutral days? Is it hard for you guys? I don't even need the candles. I mean, how do you find a neutral day? Do you guys see it?
An extension
Yep.
on both sides, but they don't vote.
Is this a neutral day?
Yep.
Neutral day says you have an extension on both sides, right? This is IB is the black little line here. So this would have been IBH right here. IBL would have been here. And it says what? And this, I'm just giving you guys reasons why you have to remember that chart, and it needs to be in your head without me pointing it out. You went above the IB, you failed back to the POC or the mean twice. You lost the mean. Where do you go? Back to the IB, we wiped the value area low, developing, you went low, and typically they say you're going to close where in a neutral day?
In the value area.
So neither buyer or seller has, influence, no influence from long-term participation, short, balanced market, right? Smaller IB than normal. Typically you close right at 50% of that day. And where did they close? They closed 2 points below it. You guys see how this can be important when you at least look at it, what's developing and why IB is important? Because the IB is in every one of these. Right? This one is probably the one that a lot of people get caught offsides. Why would that be? Remember we said earlier, sometimes you have a very small initial balance and that leads to the tip over. Give you an example of my son jumping off a table that has a small base. When you have a small initial base like this, right? And they crack out of this and they go like this, and then they do another one where they build value here. What type of day is this?
Double distribution trend day.
That would be a double distribution trend day, because a lot of people, if you're not familiar with the movement and market auction and value and the date types, you have to go with this, right? And if it's tight, initial balance, they break to the upside, most likely they're going to continue if the C period breaks it. They're going to continue higher, and this basically is creating, I would say, it's creating a B, right? And B is usually split by those single prints, and that's where we look for longs as well. That's kind of like what Friday left.
I find those the hardest to trade.
Which one?
I find those type of days the hardest to trade. I don't know why.
That's correct. It is the hardest day to trade, because what happens to your mind? What happens to your emotions? You get challenged twice. right? So, and a lot of people, when you have a double distribution, they go long at the wrong spot. They did not give you many long opportunities here on Friday on a retest. Maybe here was the only one, like here. They had some short opportunities here, right? When they cracked this 92-ish, I think we were short. But this will be a decent long opportunity when they bring it back. Here, everybody's going to go short. They dip below, give us this. I mean, we can make some money. Does that make sense? Neutral days are really, really hard to trade for a lot of you guys because it's boring and you guys are pushing buttons nonstop and you have too many trades and you overtrade and you get frustrated. Then you think that if you increase size, it might make it a little bit statistically better for you, which comes back and wipes you out. So these days are tough. You have to know that you're in a neutral day, especially if you have the IB knowledge. I think it's easy to identify and trade after that. This one here is actually a pretty good day to trade, like Friday was. I mean, we knew the key level. We targeted 60-day and created this. It never went above the IB3X. Normal days, I think a lot of you guys like this, but you have to be in a bracket to trade this. So this would be important for you guys to know. At least learn normal day, learn neutral day, not to trade this day, and then trend day, if you can identify it early enough, can be very, very profitable. If you don't, then it can be really painful, right? Because you're fighting the trend, you keep shorting, or going long when they're selling, and then eventually it does what you wanted it to do, but not at the level that you anticipated. Last piece here, so I'm gonna upload the remaining of I think I have total of 16 tapes. So this is the Peters class from 1985 that he conducted. And he's the founder of Market Profile, guys. Like, he is the father of it. So I have the audio tapes that, I've shared the first 3. And if you guys did not listen to it, you're really missing out. I mean, if I'm giving you, I don't think many people have these tapes available to listen to. And if you can't find time to listen to the guy that invented this, and you have time to listen to me, something's wrong with you. You should find time to listen to him as well and listen to the tapes and see what you pick up. I mean, he was educating top traders on the floor on Market Profile. So I would definitely devote, even if you have time, 3 hours a week, listen to one tape, set a goal for yourself to finish these tapes. It will make you a little bit better trader. He's made a lot of good traders in I would say in the world of trading. So for all the, I guess, people in the Discord, I'll be releasing these and we'll send you the password and a link where you can listen to them. I'll send them to Drew here shortly. He'll upload them and you guys will have them. You already have the first 3, but we'll resend them, all of them. And you guys can go sequentially. I have the 17th tape that's being fixed right now. I sent it over because they're trying to do something for the tape that got ripped. So, and that one is more on tips and tricks that he used as a trader. So that'll be a good addition to you guys as well. It is a pretty dry material because you don't have the visual, but I would definitely suggest that you guys go through these. I mean, this is straight from the creator of the Market Profile, not anyone else, right? And I'm probably one of the few people in the United States that have it.
That's awesome. Thank you, Shorty.
Okay. All right. Any questions? I mean, this covers, I would say, some of the stuff that we talked about, learning what the Market Profile is, so you guys are not intimidated by it, right? Are you going to learn Market Profile based on this class? I would say probably not. You have to go and apply it. You have to go to TradingView. Once I upload this shortly after the class, look at it, or maybe take a break. Spend like an hour and a half a day just learning. Identify access tails and identify if you're in a bracket. Identify, are we trading in balance? If you are in imbalance, it's a different trading technique when you're in balance than when you're in a trend, right? That, and I trade live with you guys, I would say, at least 3 times a week. We do the watch list. We'll do one tonight. I give you guys what I see. I give you guys when I trade the longs, the wins, the losses. I give them to you. So that's the only way you're going to learn is if you really, really put the time in. If you're pretending that you're putting the time in, your P&L is also going to be pretending it's growing. It's not going to grow. So I would think it's all up to you. The ball's in your court right now. So, and this is of course not the last class. We can add more to it. I think the next one would be that we do the volume profile and then kind of do volume profile and market combo where it's both of them are on the screen, and you can do that on TradingView. They're actually making some changes. I sent them some requests to update it, where you can do this. You can show it. I asked them to add some value percentages. I want a different type of shelves on volume here. It just looks too squarish for me. So they're working on it, see if they can fix it. But you can also hide this here, and that's what I do now until they make it a little bit better. And you can share this one, and then you can move this one to the right side. And you can do this. It looks clean. You have market profile and volume profile all in one here, and you're able to see you have a distribution, LVN. That's why we're looking for longs, and that's why I explained earlier that LVN is fairly important, right? A lot of times, they had one bounce from this, maybe they dip inside here, they come back, you can play this, value area as low as here, the halfback is probably a little bit higher, so you can play this. It gives you a lot of opportunities to, but just know, do not buy top of the brackets, and that's where a lot of retail loses money. A lot of people are swinging calls here. I would think they're going to dump it from here first thing tomorrow morning to deliver the pain to those. And then imagine if they do that. I mean, we will be ready for it. Like they would give us something like this. People pile in short, go here, and we can catch this move here. It's all about probability, so it's not guaranteed, but at least we have a setup. Yep. And TradingView is gonna implement. They're gonna implement this. They also have a bug in their market profile. So here they have a bug when you click expand blocks last profile on ETH, it doesn't work properly. So they said they're gonna fix it, but we'll see how long it takes them to fix this.
Do you think they'll? Sorry.
Say, go ahead.
No.
They're also planning to add TPO counts for you guys if that helps. You guys know there's a count of TPOs that matters. Instead of you guys counting TPOs, I asked them to add that and to also add, if they can add any level of delta for a number of contracts, what is the delta at high volume nodes? They don't have to give us all, but if they give you guys this, like delta at this level, delta at this level, that would be beneficial for you guys in many ways from Footprint's perspective. So hopefully they're willing to give this to premium members so you guys don't have to go one level up on this. They did give me, just being transparent, they did give me what is it? They gave me some special account. I forgot what it's called.
So they're going to have some Footprint data?
They gave me annual expert plan here. So and I'm not promoting TradingView in any way. I just like TradingView period, and we have some custom scripts and orbs in there, and they've been really beneficial to me, and I've been working with them. So hopefully they implement some of these changes that we were asking them. They did implement the expanding of the blocks. They didn't have this. I told them they need to fix some of this to add the counts, TPOs, and then also like where it says last profile, I asked them if they can add, maybe expand like 2-3 days, so you can see that. And then also when you combine and merge profiles, you basically lose the previous day. I told them it would be good if they give us the option when you merge, that you can just click a button and see the last day and how that correlates to the combined profiles, because it would be important to see it. So they said they'll implement it. I don't know what their run rate is on the sprints and backlog, but they're working on it. Any questions from anyone?
I kind of struggle with the idea of 50% of the IB and how important that is.
Not very important.
You, okay.
Yeah, I don't focus too much on. The only reason I would look at IB 50% is if the 88% of the IB rule is triggered. Does that make sense what I'm telling you? If we spent like what we did here, we spent 50% of the time, and they give me this reset here, I would anticipate that the 50% folks, remember the discount, the premium, that would be where I would look for potentially buyers to step in, and that would be a level I'd be interested in buying. That's the only reason why IB would be, but I do care about the halfback for the day and the weekly, especially the weekly. So that would be fairly important. Somebody's asking where can we listen to Peter first. So that link's posted in the Discord. If you guys are interested to join, you can definitely join. We have probably less than 12 spots for the Q1 of 2025. We keep the numbers fairly limited in the Discord. So if you're interested, you can join. First come, first serve, and then the link will be there in the Discord for the audio tape. So Peter, probably worth it just for those. All right, guys. Thank you. Appreciate it. I'm going to go watch my Falcons lose. And KJ, congrats on your payout. I saw that. I was super excited. Actually, I told my wife about it. All right, guys.
Thank you, Shorty.
Thank you, Shorty.